Hello everyone, I am Ethan Rooshock and welcome to the first episode of Q&A with Ethan Rooshock. On this series, I answer your questions about personal finance, investing, marketing, business growth, and really anything you want to know. On today's episode, I'll be talking to you about everything from why I started my business, all the way through to is property still a safe investment? And if you're watching the video and you've got some questions, I'd love for you to hit the comment button down below and leave them and I'll answer them on the next episode. All right, now let's get into the first question.
What inspired you to work for yourself?
All right, so a lot of people may already know some of this, but because I talked about it briefly in a previous video, but I've got a lot of entrepreneurial tendencies from a young age. So this is what motivated me to want to go into business. I've always been like, oh, would this business idea work? Or would this one work? And have tried little things. Or if I've seen someone else succeed and go, oh, that's a great idea. What about something similar but in this field? So I think when I discovered I had this passion from a young age, it's always been my mindset that one day I want to own my own business. And I think the thing that really drives me with this is I want to put in that hard work and put that in over a number of years and then see the long-term benefits that brings. So I love the idea of something that you can keep putting hard work into and producing quality content and quality service that over time will start to have exponential growth. And then the other thing is I love to help people. So I love growing businesses and helping people with ideas on how they can grow their business. And I also love the tax work because it's helping people with their finances. And finances play such a big role in people's lives. So when I feel like I've helped someone with this or motivate them with something, it does give me a good feeling and feels like I'm achieving something in my life by helping other people achieve stuff in their lives.
At what point should someone consider investing in shares?
Okay, this is a bit of a tough question because everyone's situation is going to be different. But some of the key things I think you should be considering before you start investing is, do you have any high interest debt? So if you've got high interest credit cards or really anything that's going to have an interest rate that's higher than your expected return, then you need to pay that down first. Have you got emergency funds set up? There's no point having your money in the share market and then pulling it all out because you've got some emergency that's come out and you need those funds then. So is investing right for you based on your risk tolerance? So if you've got a really low risk tolerance and you don't like taking risks, then it might not be wise for you to start investing at all. All right, so if all those things line up and you go, yep, I've got my emergency funds, I don't have high interest debt, I'm willing to take on a bit of risk, then you've just got to decide what type of investor you're going to be, whether you're going to be an ETF style investor where you just want to invest in the broad market. So this is obviously lower risk because you're saying, well, I just want to invest in the market. So whatever the market does, I'm happy with that return. Or do you want to go and invest in individual stocks, which is obviously going to be a bit more risky because you're putting the onus of the research on yourself more so than someone else. But I think if you were thinking about investing, you're already in that mindset that maybe it is the time to start investing, but just think about reducing the risk by maybe starting with smaller amounts and just doing your own research into it. So there's never going to be the perfect time to start investing, but think about those things I've discussed and then go, okay, make a small step into the market, whether it's property or shares or however you want to invest, just to see whether you enjoy it and whether it is really the right option for you.
Do you struggle finding the balance between home and work when working from home?
So this is a bit of an interesting one because it's a yes and no answer. I think working from home has its benefits, but it definitely does have its cons. So obviously the advantage when you're working from home is the flexibility. So especially with running your own business, is you can do work at all hours. You can be working at 10 o'clock at night or on a weekend, but this can also be a downside. So obviously this year with COVID and I've also had an injury, so I've worked from home quite a bit. So what I've found is the best way to do it is get up at the time you normally would for work, and that way you're in that routine of starting earlier in the day. I think the more you can get done in the morning, the more productive you will feel, and that will motivate you to do more. Now, while you can work at any time, this can also be a downside. So I think you need to block out time that is non-work related. So switch off at times. Don't sit there and be answering emails 24/7 or be doing bits and pieces all day. You need to have times where you do switch off from things. But just to contradict that, if you're feeling motivated, go and work at that time. So there'll be times that it'll be a sad day and I'm going, no, I really want to smash out some work, so I'll go in and get that done then. Or it could be 10 o'clock at night that you're sitting there going, oh, I've got this great idea. And don't be scared to then work and be productive for an hour when you're feeling motivated. But I think it's all about having a routine and doing what works well for you and making sure you still do have a balance between home and work life, even if they might merge together at times.
Is property ownership still a safe investment?
Alright, well, I'm not sure if I'd class anything as ever being a safe investment. Well, even if you hold cash only, that's not always going to be a safe investment because of inflation. Or, robberies or anything else, or your house burns down. So even though property might be deemed as a safe investment as such, I don't think there's any safe investments. So I think the concept of property being a safe investment comes from, in particular in Australia, we like to own things that are tangible. So when people buy, say, an investment property, they go, yeah, I own that. Look, here it is, you can see it. Whereas when people buy shares, people go, oh, well, how do you know you own it? So it's just a bit of a mindset thing that people like property because it's something physical they can see or they can go visit, for example. So there was an ASX/Russell long-term investments report done a few years ago, and it showed in the 10 years to 2017, property returned an average return of 8% per annum. So I think property can be a safer investment from shares if you think about it from a point of, will your property ever go down to $0 in value? So if you buy shares in a company that goes bust, those shares will be worth nothing potentially, and your investment could literally go down to $0. Whereas if you buy a property, it's very, very unlikely that that property would go down to nothing, because even if the property didn't exist anymore and you didn't have insurance, the land itself may still be worth something. So I think there's less risk in, say, buying a property in Sydney of that property going down dramatically to no value. Whereas with shares, if you were to buy just in one particular company, there is always that risk. But again, it's very unlikely if you were buying in a big bank or something like that. The other thing to consider with property is, are you buying into a market that has dramatically risen? So for instance, in 2019, in Sydney and Melbourne in the third quarter, property prices increased by about 5%. So that's a massive increase in a small amount of time. But if you then come in and bought just after that, you've then had the COVID situation and you've just bought on the back of a high rise, that maybe that property isn't going to be as safe because the price is already a bit inflated. So that's a consideration you have to make when investing in property is, are you buying into an inflated market? So even if the value only drops by 20%, that makes your investment a lot less safe because property prices still can drop and can drop significantly. The other thing to consider with property is it's not as easy just to flip them. So what I mean by this is that if you think the property market's going to drop, it might not be as quick for you just to go sell that property. And you also will be paying more fees every time you make a transaction. So say compared to, say, the share market, if you think the market's going to drop, you can sell out. Normally, if you're in a standard share, you can probably get your money sold that day and you don't have to worry about extra fees besides a small brokerage fee compared to property. So for example, with property being safe, is you could take, for instance, a regional town, for example. Now you may get good returns on that town because the rent prices may be good or you're getting in at a cheap price, but that town might be reliant on one industry and suddenly that industry is gone and your price could still drop dramatically. So even though you're getting at a cheaper price, it is still a risk. And of course right now with COVID, is that none of us really know how long this recovery period is going to be. So for instance, in Australia, we get a lot of international students that come back in. So that increases demand for properties in those regions because there's more people wanting to rent, which means there's got to be more supply of properties, etc. So when this doesn't happen, suddenly the rental market isn't as attractive, which might want to get people into selling properties. And then you have too much supply and not enough demand, which can drop property prices. Whereas other regions like WA and Perth at the moment are going quite strong because they're not as reliant on those international students. So I think the next 12 months is really going to be interesting on how the market rebounds, and it's just something you need to take into consideration in any investment. So I think it all comes down to where are you buying and what price are you getting things at. That's no matter what type of investment, but property is very true in this matter.
How do taxes work for investments you make overseas?
All right, a lot of people think tax on an overseas investment is going to be really complex, but it's actually not that complex. So it's kind of treated the same as what an Australian investment would be. So if you buy shares in a company in Australia and you buy shares in a company in America, the treatment is almost identical. The difference is that obviously one's going to be in US dollars and one's in Australian dollars, so you need to convert the US dollar ones back to Australian dollars. So you'll pay tax on any dividends you receive and you'll pay tax on any capital gains you make. The only other area is foreign tax offsets. So if you're paying tax on some of these investments internationally, you may be entitled to a foreign tax offset. So again, this will be back in Australian dollars, but it will offset and be treated as like a credit of tax you've paid when you do your Australian tax return. The ATO website actually has a lot of good information on this. So I'd recommend you going on there and having a read about how foreign tax works and really how the offsets work. The same will be true for a rental property. So again, you calculate your income and your expenses each year, whether you end up with a profit or loss situation. And then if you sell the property, again, you'll have a capital gain or loss. So very similar to an Australian property, but the hardest part might be when you're converting figures back to Australian dollars. All right, so that was quite fun. We had some really good questions there that covered a range of different things. So I want you to leave a question down in the comments below on what you want answered next. And as always, thank you for watching, and I'll talk to you on the next episode.